Hello and welcome to a brand new show of Market Makers. Well, we are staring at interesting times. Both locally and globally, a big reboot has happened. Globally, the assumption is that global growth will make a comeback. The era of low interest regime is behind us, but domestically, we are working with a scenario which is rather confusing. Markets are trying to understand the impact of demonetization, how it will cripple the economy, and what could be the effect of demonetization on large sectors like industrials and consumption. So to understand the big picture for 2017, and after a rather nervous ending to 2016, what is in store for us in the next 12 months? So to decode some ideas, themes and mega trends for 2017, I have the perfect guest, Hiren Ved of Alchemy Capital. Hiren, fantastic to have you back and thank you for joining us.
Thank you, Nikunj.
You know, it appears to me that the world has taken a complete 180-degree turn. Trump is the president-elect. India, some would argue that right now the scenario is not all that rosy for consumption. Crude has changed trajectory and the environment of low interest regime is behind us.
Yeah, I mean, I think if you look at all the macro events this year, they have all surprised the markets, whether it was Brexit, and then whether it was the US elections. So I think that, we are seeing, as they say, interesting times in the global macro scenario. I think, but the good thing is, I think that if genuinely the US economy picks up next year, right now it's all hope. Yes, there has been some strength in the US economy given where the unemployment rate is. But if what they expect actually turns out, it may be a good thing because the world needed an engine of growth. That was China. China sputtered, and then there was no leadership. You need leadership, of a large economy to start moving and making a difference. So I think initially a rate hike in the US has always meant pressure on emerging markets. But if US genuinely continues to grow, at least historically it is seen that as yields in the US have risen, after a lag, emerging markets also catch up. Because once people make money in the US market, which they have, then their risk appetite goes up over a period of time, and relatively emerging markets will become cheaper, and then some of that liquidity hopefully will come back into the emerging markets. So that could be a possible scenario going into 2017. But yes, I mean, right now, from a domestic point of view, we are staring at a quarter or two of slowdown in India. So we'll have to see how, the liquidity versus, corporate profitability growth plays out in India. So it's going to be quite an interesting combination, at least in the first 2 quarters of next year.
Okay. Now, there are 3 aspects to any market. Short term is sentiment, medium term is liquidity, long term is earnings. Let's address the short term first, sentiment. The sentiment for Indian equities is bad. We are underperforming global markets and correction has already started in mid-cap stocks. And technically also we are in a spot of bother. When do you think the sentiment will improve?
See, I think that it'll be interesting to see what the government does post 31st December. Definitely, while demonetization is a great step in terms of, increasing the white economy in India and to get more digital, but we have to understand that it cannot happen overnight. It's a process. And obviously, this is a bold move, and this has definitely kind of shocked the economy in the short run. So my sense is that if the government, and I'm sure that they realize this, that to bring the momentum back into the economy, will have to focus on cutting tax rates and stimulating demand. The faster they do it, the quicker the sentiment will improve. So I think that it will be very, very important to see what Jan and Feb holds for us. If they manage to improve the sentiment, then I think things should be fine, because domestic liquidity into equity markets is reasonably good. In fact, one industry that has actually benefited from demonetization is the financial services industry. We are seeing that hitherto people who were shying away from investing in equities are using this as an opportunity to allocate increasingly to equities, and that trend is likely to enhance. I think in the medium term,
which is flows.
Domestic flows will be strong. I'm not too sure what happens immediately in the first quarter to international flows. Maybe because the dollar continues to be strong, you might continue to see a kind of a tepid inflow profile from FIIs. But the second half of the year could be pretty benign for global flows as well. So I think if the US continues to do well, as I mentioned, you might see an overflow then coming into India as well. And I think globally what we've seen is a rally in value. And India was not value. I mean, India was a favored market. It was an overweight market. So in the initial phase, maybe we may not get that much help from foreign flows, but domestic flows will be very, very strong, according to me.
Post demonetization, how have you changed your portfolio strategy? Have you changed your top 3 holdings?
So we did trim a little bit of our financials, but we still hold a core position. We used the opportunity because there was knee-jerk reaction in several companies. So more than sector specific, if we liked a particular name and there was a knee-jerk reaction incident initially, we used that opportunity to buy. So I think that nothing will change dramatically if you ask me. I think leadership will go back to companies that are well run.
So what is the leadership of this market? Let's understand that, because consumption was the leadership of the market. It's a tired leadership. IT is not the leader, is lacking that punch. Pharma looks like a bear market there has started. Industrials, they were never off the block. So how do you define leadership in this market?
So actually, if you see Nikunj, if you go back and look at 2016, some of the leadership was taken by the PSU banks.
Okay.
The private banks and NBFCs were also doing reasonably well. I think to some extent that leadership has been punctured, at least in the short to medium term, right? Because of what has happened, there is some uncertainty around that. My sense is that this leadership, albeit with a lag, will go back to private financials, because I think that demonetization is a big boost to money coming into the financial sector, so away from physical assets like real estate and gold. While we saw a temporary spike in real estate and gold sales, but I don't think incrementally money is going to go there. Money is likely to come into either the debt markets and, more importantly, I think into the equity market. So I think private financials, companies which have a good distribution, are likely to use the deposits that have come into the banking system to cross-sell a lot of products to their customers. I think urban consumption will bounce back faster. Rural consumption might need a little bit of help, and that's where we have to wait and watch and see what the government does over the next 2 months.
So I'll spend some time with you trying to understand financials. I mean, it's a very large weightage. From PSU banks to MFIs, everything is under financials. Now, you've historically liked NBFCs. You've owned names like Bajaj Finance. You've owned names like Bharat Financials. Are you still happy to own the good old NBFC names?
We're still happy to own. We've trimmed some of that holdings, but we are still happy to hold financials. I think incrementally we are seeing some interesting opportunities in insurance. I think that insurance penetration will, after many years of flat to low growth in insurance, starting from 07, 08, when the mis-selling was at its peak. After that, you had too much of regulatory oversight, and then you had virtually the sector slowed down. Now that consolidation is happening in the sector, so big players are merging into each other. They are also raising capital, so they are going IPO. So I think you will see some interesting opportunities in insurance, and SBI insurance deal has also happened. So I think you will start seeing that some of the big insurance companies have to be part of the index because they are large companies,
So
right?
your top theme for 2017 is actually bet on insurance companies.
Yeah, I would say that, insurance is one field, but overall, I think the leadership will go back to private financials, private banks, some well-run NBFCs. The leadership will go back to them.
Is there a tactical trade in PSU banks? Because the logic here is that suddenly they have a lot of capital, interest rates are likely to come down, NPA cycle at least, okay, the NPA cycle has not turned, but awful has become bad, awful has not become great, and now suddenly they don't need a lot of capital.
So, my view is that, probably tactically it could be a move, but longer term, I don't think so. In fact, recently one of the private NBFCs did come out with an update, and this was an industry update based on CIBIL, scores in terms of how much retail inquiries they have seen in terms of lending. PSU banks had virtually stopped lending to the corporate sector, where the growth was in retail. But right now, you see that the biggest fall has come in the PSU banks, which was down some 40% plus, while NBFCs and private sector was in mid-teens fall, right? So I think that it looks like that at this point in time, because of demonetization, the PSU banks are going to be distracted. And I think that, in fact, they will have a challenge because you have deposits, but your credit growth has actually slumped, right? So NPAs could be better because, people have deposited money against their cash credit and overdrawn accounts. So probably that we are seeing across the board that, NPAs have actually turned better because money is now sitting in the bank. So, you can't be defaulting and money sitting in the bank at the same time. But the longer term story is about NIMs and credit growth. And I think there is where I see actually a challenge longer term to PSU banks in terms of credit growth. They have to get out of this mission mode that they are in right now and start, getting into lending. But my sense is that, the private guys will continue to take away market share from the public sector banks.
If I take the clock back, December 2015, everyone had written an official obituary for metals. Metal index in this year has given a return of about 45%. Is that just mean reversion?
I would think so.
So you don't like commodities?
I'm not very confident. I could be wrong. I'm not saying that it's a conviction-based call to say that commodities may not do well. Certainly there is some mean reversion because commodities were bashed out of shape early in the year and they have rallied very well. And now what has fueled the rally is the fact that the expectation that Trump will spend money on infrastructure, and therefore that has helped oil prices and commodity prices to continue to rally. But I think at the margin it's good news because commodity deflation was also one of the reasons why our earnings did not grow. So I think if you have some commodity inflation, you will have some support to earnings coming in. I don't know how far this will continue because you will have to really take a call on China in 2017. What happens? They did a stimulus in 2016. They again tried to reflate the housing market in China. And therefore we saw some stabilization of macro happening in China. But whether it will sustain into 2017, I'm not too sure. But yeah, I mean, you're absolutely right that it was a hated sector, underinvested sector, and that sector has done phenomenally well this year and continues to do well as we go into 2017.
Could that happen to pharma in next 12 months? As of now, everyone hates it. I mean, I can give you not 10 but 15 reasons why you should not buy pharma. 3 years ago, I would have given you 15 reasons why you should never sell pharma.
Yeah. So I think pharma is also going through some kind of mean reversion. You had many years of solid growth, and now there are challenges, both in terms of US FDA issues, there are pricing pressures. But I think slightly more longer term, if you take another 3 to 5 year view from here, this is one sector which still has a lot of potential
So
in
stick
India.
to the top 3 names here. Because in pharma,
Yeah.
I'm not sure if you really want to stick to the top 3 names here. Because the problem is with
I
top
think
two,
I
three
think in
names.
pharma you have to go stock by stock. You can't take a generalist approach whether you want to be large cap, mid cap. I mean, there are great mid cap companies in pharma. There are some great large cap companies in pharma, and each one has a different story at this point in time. So you got to kind of figure out where you want to lay your bets on, because pharma is a very stock specific story. But there is always an opportunity in a sector that is getting derated, right? I mean, just look at it. I mean, 2 months ago, nobody wanted to buy tech, but now suddenly tech is come back in favor. So these mini cycles keep happening in the markets. So, suddenly now domestic stories are not, because people are saying, yahan pe, there's a problem of demonetization, so let's look at exports, right? Then you have a global macro issue, then people will say, forget, export stories, let's look at domestic. So I think those tactical changes you can keep doing, but there is always an opportunity in a sector which has derated for 12, 18 months. But you have to take a slightly longer term view.
Time cycles have tested them that, there are companies like Asian Paints or Page Industries and Blue Dart, they will really survive, irrespective of how stormy the conditions are.
So part of the opportunity is in those kind of companies, and part of the opportunity I think is going to come. We'll have to wait and watch. But things like infrastructure, where the government is likely to spend more money, probably they will again put money back into the hands at the bottom of the pyramid.
So do you own infra names?
We do own some infra.
Large cap, mid cap?
We own both large and mid.
You liked road companies in the past?
Yeah, I mean, not specifically road, but we have some good quality EPC companies, where the balance sheets are good, and they have the ability to bid for projects and grow. So I think power transmission, EPC, maybe some defense companies in the infrastructure space will continue to do well.
Are you consciously moving away from mid caps? Because when the market cycle will start, it will not start with mid caps. It will only start with large caps. That's how market cycles move.
Yeah, I mean, generally speaking, yes. I would say that probably mid caps were relatively more expensive than large caps even before the correction happened, and that correction actually has has taken some sheen off mid caps. But I think, relatively speaking, I would say that large caps are still cheaper than mid caps, and there will be an opportunity there, and that's where we are focusing. If we like a business area and if we are able to find a good large cap name, we prefer a large cap at this point in time than a mid cap.
Now, 2016, the core of the market was that buy cyclicals, buy a little bit of beta, buy industrials, because the new economic cycle had dawned on us.
Yes.
Now the mantra is forget about appreciation, let's go out and protect capital. So do you think for next 12 months you have to be in this capital preservation mode?
No, I don't think so. I think you have to bet on the fact that a cyclical recovery in India will happen. I think that there is this 1 or 2 quarters of aberration that has creeped in. But I think the script has to be that the economy has to revive.
So are you ready to buy beta in your portfolio?
Absolutely. Because beta is what gets smashed on the downside. And that is the time to buy beta, not when the markets are running away. Because when the recovery happens, that's where you will make your money.
It's only hindsight we figure out which sector or which company will become a multi-bagger. You cannot see them, but you can smell them. So where are you smelling this opportunity of outsized gains?
I would say now it looks like that it would continue to be in the combination of somewhere in private financials and the more cyclical end of the market.
So when you say cyclical industries,
could be infrastructure, could be could be capital goods, could be cement, Could be any of these.
So, what I'm trying to understand.
Anything that is linked to a recovery in economic growth.
So there are two powerful themes: the effect of demonetization on consumer and the economy, and the impact of GST on the unorganized sector. So let's talk about the second aspect. GST hopefully will be rolled out somewhere in 2017, and it will have a huge impact on paint companies, plywood companies, footwear companies.
Yeah, absolutely.
Are you aligning your portfolio to capitalize on that opportunity?
Yes, I think that there is a big opportunity of if with demonetization plus GST means there is going to be massive consolidation in some of the unorganized sectors where the trade was still using cash, and some of these companies are relatively small, but the opportunity is relatively big. So we do believe that there is going to be an opportunity to bet on companies which are moving from unorganized to organized.
Give me an example.
I mean, it could be home improvement, home furniture. It could be paints. It will continue to be areas where there is too much fragmentation in the marketplace.
Maruti versus Tata Motor. Next 3 years, which will make more money?
Next 3 years?
Next 3 years.
I would say probably Maruti.
Even though Tata Motors is a ride or a play on global recovery?
We don't know as now. I mean, Tata Motors is doing well independent of a global recovery because of its model cycle. And the model cycle is going to continue to be strong going into 2018 up to 2019, right? But you also have to understand, and also the domestic at the margin is improving. But I think that Maruti is a secular story, much more secular story than probably Tata Motors is. We have to wait and watch whether the domestic side of the Tata Motors story also gets into a secular story or not. Right now, they are in a recovery mode, and JLR will continue to do well.
HDFC versus SBI, what will make more money?
Tough one. I don't have an answer to that. But I would say that maybe smaller housing finance companies could do better.
HUL versus ITC. That's an easy one.
Again, a tough call because a lot will depend on cigarettes, but I would think ITC.
Bajaj Finance, we all know. What is the next big one for Hiren Ved?
I have no idea. We will know in the next 2 to 3 years.
But you work with a scenario, you work with a probability. So out of the top 2-3 names which you own, some of them are in the public domain, where do you think there could be a scope for an outsized return? Now, whether that happens or not is a function of economy, it's a function of company, it's a function of earnings. But you work with a scenario, you work with the assumption, you always throw in this model of margin of safety.
Yeah.
So if you have to strike out some names or some themes or some ideas based on your model, where you think chances of getting it right is greater than chances of getting it wrong?
I would say we've placed some bets on specialist IT companies. It could come out of there, or it could come out of some private financial. And when I say financials, it's a much broader theme.
HFC versus microfinance.
At this point, I'm not clear. But both have a long way to go. Both of them have massive underpenetration to go.
Final question, why is ET Now your favorite channel?
Because of Nikunj Dalmia.
I love that answer, very humbling to hear that. But so lovely to have you back on ET Now.
Thank you so much.
You and your family a wonderful 2017.
Thank you.
Thank you very much for joining us.
Wish all the viewers very safe and a happy 2017.
Thank you very much. That's it on this edition of Market Makers. I'm Nikunj Dalmia signing off. Thank you for tuning in.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.